Hi friends, let's take a look at Link, right? Look at Link, look at that, look at that, look at that price action that we've had. So in yesterday's candles, we came up here and put in a close, in fact, below the 236. Haven't tested the 236 again here at the 145k area. You know, not having managed to push past that and fake out even up towards the upper line, having tested that the day before and been rejected from it, and then moved down towards the lower area, and perhaps we've come in here quite close, maybe perhaps close enough to these areas down below to say that we constituted a test of it. If I zoom right in, you can see that for yourself with your very own eyes, but maybe perhaps you could look towards that 35,545 zone, or 135,545, 135,045 zone here for being a really excellent area as a low risk management long. But indeed, we've moved past that already, gone back towards the top side. We're sat there at 135,071 Satoshis. No, wait, what am I saying there? You could be looking down towards that 128,000. Sorry for following my words there. 128,000 area, 129, 130, whatever. You could still be looking towards that. We've come down as low as 130,000 already today. That's definitely close enough. It's close enough in terms of low risk management. And you're sat there currently in a happy dappy profit at the minute there of 3.5%, able to move your stop into a profitable area as well if you want to and trade this thing without any risk at the minute. That's really lovely based off of all of this. If we do move down below that line in the 21 EMA, then you can absolutely look forward towards things like testing off of this, a retest of this previous sort of downward sloping trend line, coming in there towards that 120k area where we have the lower line. Movements past that could even see us visit the 55 or the 50 simple moving average, coming in here towards the lower end of our pitchfork, and then as well where the 618 is, and that could even see the prices go down as far as 100k overall if that were to be the case as well off the back of all of that chat. So that's where we are right now. And moving on though to look at the, well, you know, we had this symmetrical triangle on the go here on the RSI. We moved out that, we got a measured move. We put in a high over here, which is higher than this high, which is in terms of this being a sort of downward trend ever since the 16th of August, which you could look at it as that's hidden bearish divergence on the go there. So like, you know, let's see if that exists on the dollar pair and pricing as well. And that's across the board on those oscillators. And in terms of the upside and moving, then, you know, that's not divergent looking at the ups, just as part of this upward trend that we've got so far. So there's your dynamic for you. We're below the moving average on this thing. I'd want to see that moving towards the top side, or else we can kind of then think about it as being the sort of the previous trend, which was since the 16th of August, or else the previous to that trend up to the 16th of August. And looking at this here, price action, we've done similar type of things, but we've actually found ourselves being supported by the 236 over here, which is very interesting indeed. And if we bring up this here and look at it, well, we came up higher than the previous high over here, which was over here, and this is indeed higher than it as well. And this was a higher low, which was actually coming in as being bullishly divergent ever so slightly. And perhaps I might have said that wrong, but it looks all right. And then we moved, whatever. But then we've come up here towards this area being resisted by our parallel channel towards the top side. Everything overall kind of, you know, tying in more or less with how we thought things could go. And so far we're above that 1559 area where we're looking for support. We have actually come down here pretty close to 21 EMA, and we fulfilled the measured move off the back of in a couple of days ago now, the descending broadening wedge. So, you know, while we've seen this drop down in price action, overall it's putting in a higher low, it's a higher high. In this section here, it's not bearishly divergent, just in terms of with regards to starting off with, you know, going up the way since the 22nd of August. And if we find support here, that's all to the good. The sort of the counter to that has got to come in at alongside, you know, this Fibonacci, where you can see, you know, we moved up above the 236, jolly good. Moved up to and took out the 382, jolly good. Had a body resistance here, and that closing in at the 50% mark. But actually, you know, we subsequently went up, hit the golden pocket, then retraced back down below 50%, down below the 382. So you know that that's the go, and if you the case, and if you see this on the go as well, having like fulfilled that upward side movement, so this is like the sort of the bear scenario, then you can see then if you were to contrast that versus then where we've come from. If you were to contrast this movement towards the top side versus a Fibonacci retracement, again, taken from the lows. I'm sorry that this the volume candles keep, right, just do that, that'd be better. So if we were to then compare this most recent move up and where we've come to so far, then you can see that quite clearly that the resistance coming back in there again at that 1660 area is showing us where the 236 is. We moved past that. We knew we had by how we came up to the 618 and the 50 and the 382. So we knew what we had there on that one. We went down towards the 50% so far. Then we're actually, we're just back above the 382, and movements down below 1580 are going to be considered, kind of sketchy. We could then see 1559, 1560 being tested again. Movements down below there would be, sketchy from this bigger term Fibonacci retracement. And we could look down to where we have this golden pocket at between the 21 EMA and the sort of upward sloping trend line support area that we have since our lows. And that would still just be putting in ultimately a higher low if we were to retrace down to 1470 again, and perhaps open up another good buying opportunity for people who want to see this bullish trend continue. Having come up here with 3 instances of fairly obvious and strong, if you like that terminology, bearish divergence on the movements towards the top side here, which resulted in this downward trend ever since the 16th of August, if you like. If you like, and if that's the case, well, then this is a hidden bearishly divergent top here compared to these previous ones, if that's the case. But if not, and this is just an upward trend that we've been in then since we hit those lows over there on the sort of the 21st of August, as we're speaking about, then of course we've done quite well and removed, and like as shown by the Fibonacci retracement, as shown by us having come up to these targets that we have. And that, but I'd like to see, but we've now moved back down below the 236 on this one, so I'd like to see us take that out again at 1660 for us to be able to remain bullish on this. Okay, overall, right, nice one. I think I've kind of laid out the targets. I know there's a bit of mess in the charts. Not that going to get that upset about the mess there, and the whole story here is all like, here's one I made earlier style, so you can see it all anyway. And currently we're below the 236 on this, and this is from the previous swing low before the highs that we just did. Down there at the sort of $6 odd area up towards the $20 area, and so the 236 on that one comes in at 1680. Being below that, it's not so super fantastic. There is this sort of somewhat head and shoulders-esque movement there. You can maybe see it on the 1 hour a bit better. Whatever, who cares about it? And we've moved down towards these lower targets. And we've hit so far off the 50% subsequent to that move. And that would be an okay area for things to turn around at. Of course, that's what Dow Jones said. We covered all this in the past. But we've come up here and so far, while we did invalidate this Fibonacci, at that point, we've come back down again with this little structure. And we're looking to see if we can see support if needed at that 382. If not, then we could be looking down again towards the golden pocket target, and that could be 1150. And there's other things to look to as well that we've spoken about in the recent past, like 850 again, if you were to go for the 618 on a big old retrace off the back of all of this, if that were to happen. So that's your negative case scenario. The positive case scenario really does a good job speaking for itself. If we see movements definitely above 1660, then that's nice. And we could look up towards the purple line here at 1780 as being your next sort of target, having achieved everything else we've spoken about in the recent past more or less perfectly, and everything's jolly good. And that's why you subscribe. Look out for things like head and shoulders and whatnot on the RSI down below if you like. There's various other things you can do as well in terms of looking to these points here, in terms of if the RSI moves actually below 40 at the minute, things could be quite bearish in that sense, because what we'd be doing is confirming this perhaps as being hidden bearish divergence at this point here, there on this downward trend since that 30th of August. Look at this on the 4 hour, on the 4 hour time frame, looking at this just down the way. But then is that going to then ultimately turn into a descending broadening wedge, in which case, yet again, as we've done in the past, this would be a continuation pattern for more upside price action should we actually not manage to do anything worse than, say, visiting these other little targets down below. But we've done enough there. I'd like to see us managing to stay with the RSI above that 41 area. I want to see this re-challenge the neutral zone. And I also want to throw out a little bit of caution there. Well, we had this kiss here that is now, and we had this cross while it was above 20. We had the cross well, it's above 20. At this point here, you could kind of consider this to be a hold in terms of your short position. If you were to, if we see this diverge away again, it could be kind of negative. And indeed, if we see this come down even further, then these are probably cross back again. And you might have a bit of a no trade zone until we figure out what's going on, with perhaps a subsequent move towards the top side thereafter. really kind of covered everything you need to. Again, share this video with your friends, youtube.com/RockyOutcrop, because that's the place to be for technical analysis. I swear to goodness. And YouTube, and hit that join button or that subscribe button. If you don't want to hit the join button because you've not got enough value from this yet to send me back a cup of coffee, that's cool. Don't worry about it. But hit that subscribe button then, at least, because it would really nice to see your support there and help the channel grow, because I would appreciate it. Cool. Nice one. All good? I think so. I think we've covered enough here. Let's see you again tomorrow. Thanks very much. As I say, I've been Rocky Outcrop. I'll be Rocky Outcrop when I come back again tomorrow. And have a great day, everybody out there in the world of crypto. You crypto pioneers. There be dragons. Sure there are. But we have our boat with us, our apples and our biscuits full of maggots. And we're happy enough to sail along. Cheers now. Catch you next time.